Good day to everybody, to all of our subscribers. Again, the Future Trend channel is with you this morning. We started from our analysis of major currencies. The general tendencies of foreign exchange markets at the moment is more or less associated with trading policy conducted by the United States authorities. As you know, a problem of rising, expanding trade wars will not bode well for the world economy and for the United States economy in particular. So from this point of view, this kind of process, the rising tensions on the trade basis between, for example, the United States and China should sooner or later result in the lower dollar. Although from a reasonable point of view, from a logical point of view, higher tariffs imposing by the United States authorities at first glance should produce higher inflation in the country and as a result the higher United States currency. Anyway, now the market is more or less used with the kind of rising tensions, trade tensions between the United States and its major trading partners. And now the market started to focus its attention on the fundamental factors. As you know, at the end of this week, we will have a kind of very important United States economic data in the form of United States payrolls report. Also during over the course of the week, the head of the Federal Reserve System, Jerome Powell, should appear in front of the public, and also we should pay your particular attention on this kind of appearance of Jerome Powell, because this kind of economic data in the form of United States payrolls report, as well as the speech of the United States Federal Reserve System president, should lay ground for the nearest trend of the United States currency for the nearest future. Now, regarding our analysis of major currencies, where we still keep our long trade recommendation in the euro dollar entered at 22.90. And once again, as you know, the euro dollar should be treated more or less positively while trading above its longer term uptrend located at 22.30. Let's see more closely, 22.25, at the moment 22.30. That's why we still expect this kind of pair in the range, roughly below the lower threshold of a currently established range of 21.50, and higher kind of barrier around the maximum, the highs of 2018, located at 125.56. While the euro dollar is inside of this range, we can treat the pair more or less neutrally in the nearest future. The dollar yen is a victim, of course, is the victim of risk trading relations connected with the current United States trade wars with its major trading partners. Continuous expanding of this kind of tensions, continuous expanding of trade wars with its partners, United States partners, should produce a higher Japanese currency from the point of view of risk aversion fears. At the moment, as you see, the market is more or less relaxed about this kind of process. And as you can see, the stock markets are on the rising trend at the moment, and so the yen crosses as well. Anyway, while we are below 107.90, where we see kind of very critical resistance barrier for the future, nearest future of the dollar yen, we still continue to expect the dollar yen lower from here. The cable is still on the rising uptrend line above its immediate ascending trend at 140.30. But anyway, to the upside, we can note a kind of very tough resistances to break in the form of 141.45, 142.45, and finally the highs of 2018 of 143.45. Anyway, once again, from a longer term perspective, the cable should remain more or less supported in the nearest future. And finally, the dollar Swiss. We'd like to pay your attention on tomorrow's set of important economic numbers that should be released in Switzerland. The consumer price inflation is, of course, in number one for the Swiss National Bank. This kind of economic indicator should control the future decisions of the Swiss National Bank regarding its monetary policy. And as you know, yesterday the set of Swiss economic numbers were not so good, and from this point of view, the Swiss National Bank should conduct its ultra easy monetary policy that should result in the lower Swiss currency. Anyway, from the point of view of technical reasons, we still expect that dollar Swiss franc will resume its underlying bearish trend sooner or later, while trading below moving average 200 daily line located today at 0.9655. That's why we will resell the currency on a possible uptick to 96.40, 96.70 with a closer kind of stop above 0.97. Some later we will come with our analysis regarding the euro crosses. At the moment, that's all. It was FutureTrend channel with you. Bye bye for now.